The U.S. life insurance industry faced numerous challenges due to the pandemic in 2020. But 2021 was a different story, as many companies posted record premium growth for individual life insurance products. I'm John Weber for AM Best TV. Here to discuss a new AM Best report is Helen Andersen, Industry Analyst, and Jason Hopper, Associate Director, Industry Research and Analytics. And Helen, life insurers reported an 11% increase in direct premium written last year. Are we seeing some sort of trend there?
Well, if you look at growth rates in direct premiums written going back 30 years, 2021 really stands out as an anomaly. In 2021, there was the highest growth in total direct written premiums since 1993, and the highest growth in new premiums since at least 1990. And that growth in new premiums contributed more to total premium growth in 2021 than it did back in 93. And in terms of more recent trends, 2021 had more than double the growth rate of direct premiums written than any year in the past decade.
Now, many companies reported that they had operating losses this past year. Is that correlated to the growth?
The short answer is yes. All that new business brings with it new business strain. So in the initial years of a life insurance policy, the premium amounts aren't enough to cover expenses, commissions, and statutory reserves. And then over the duration of the policy, as premium payments continue, that strain diminishes and returns are realized over time. So the industry insurers are bearing the brunt of those front-end expenses due to all the high growth, and that is contributing to operating losses.
Jason, the pandemic no doubt had an impact on both renewals and payouts. Is it fair to think that the pandemic becomes endemic, these measures will return to historical levels?
I mean, you'd have to think to some extent. 25% growth in new premiums, I think would be hard to replicate as the pandemic gets a little further away from mind. Vaccines are coming through. People might not have the inkling to buy insurance like they did throughout 2020 and 2021. Having said that, on the death benefit side, you obviously saw a spike from COVID deaths, right? Older people generally started dying first, right? But at the same time, those sort of folks don't have higher face amount policies such as term. So the impact to life insurers was somewhat muted in the beginning of the pandemic. And then we started seeing younger people die more frequently. So even if deaths continue to decline moving forward, you're still likely to see some elevated level of claims just because of the people that it might be affecting going forward. But obviously it's too early to tell. You have other issues, substance abuse is coming back to the forefront, or just care that was put off during the pandemic. Might be some diseases or health issues might be a little more advanced now. So we're seeing that trickling effect as well. So there very well could be a near to medium term impact on claims going forward.
And how are the higher interest rates impacting life riders?
So obviously there's a lot of uncertainty in the world economy right now. U.S. potentially dealing with inflation, a rising interest rate environment. You have supply chain and bottleneck issues. So all of those things are kind of converging on life insurers right now. Will we see disintermediation risk? That's quite possible, depending how high and how fast interest rates move. The quicker and higher they move, the more likely we're going to see more of a, not mass flood of people, but heightened numbers of people relinquishing their policies, looking for new policies that are offering higher rates. So there's a lot of uncertainty, and we'll see how all that plays out.
Jason, Helen, thanks for speaking with us today.
Thanks, John.
Thank you.
You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.